From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 11th, 2016. I hope you had a great weekend and are ready to get started trading for this week. In today's video, I'm going to be reviewing the AUDUSD and the NZDUSD. Both of these currency pairs rising into a couple of resistance zones that we want to pay attention to for the day today and looking for some trading opportunities. First off here on the AUDUSD, the Australian versus the US dollar. Over the past several months, we've been studying this triangle pattern, the contraction or consolidation pattern between the two red trend lines where the market had falling highs and rising lows. Over the past week or so, we have seen the breakout of that pattern. Remember, if you go out here to the weekly time frame, the previous trend was down, and now we've seen a breakout underneath that triangle pattern at the bottom of the trend. So very interesting. If it continues to pressure lower, we look for a continuation of the previous downtrend. Back to the daily time frame. So in that pattern of the trend, if we're looking for the breakout and the continuation of the downtrend, there's two scenarios where we're looking to go short or sell the currency pair. That's a rally into resistance or a break underneath support, and we're looking for lower risk and higher reward opportunities to do that. If you take a look at the pink shaded area here on the chart at the very bottom, just between the two green shaded areas, you can see between 7,010, 7,030. That's the pink shaded area highlighted. Of course, you follow that back in time, you see the last support low that we're seeing on the left-hand side of the chart. We also see some resistance back here. We see some support on this spike low over here. So we know that this area right around or just above the 7,000 level is a critical historical decision point where buyers and sellers are exchanging hands. Let's go ahead and zoom it in one more time here on the daily time frame. So we can see that coming into that pink shaded area. Again, there's your support on the left. Let's take Fibonacci, just one simple fib from the current resistance high down to the current support low that we see down here at the bottom. So from the high of the current blue trend line down to the low, puts the 236 Fibonacci retracement level right at 7,020, right in the middle of our pink shaded area. So clearly Fibonacci overlapping inside of here. We see historical support. This is going to be a primary decision point with low risk and high reward. The scenario is you're looking to go short into the resistance level. We have, of course, the downtrend line there. And we're looking to target the next support, which is the green shaded area down here. So we have, let's just say from that 20 Fibonacci level down to the low, we're looking at 80 to 85 to 90 pips of profit on the way down. The risk, what's the risk in the scenario? Well, the risk in this scenario is that it breaks above the pink shaded area. So your stop losses are just above the pink shaded area. So if you measure that from the 20 level right in the middle where that Fibonacci level is, you know, you're looking at 30, maybe 35 pips of risk. So you're risking 30 to 35 pips, potential gain over 80 pips of profit. So risk reward is justified to go short into the pink shaded area. Now it may not make it all the way to the fib level at 7,020. So you might want to go a little bit lower than that, 7,010, 7,015. But all in all, it looks like this is the place to trade from for the day today. 4-hour time frame, again, doesn't really change the scenario, just gives us a little bit of a zoomed in view. You can see there's the same Fibonacci high to low on the chart. There it is, 236 right in the middle. Of course, the risk is a break above there, goes back to the green zone up here, and we see the 382 is sitting in that green zone. The target, of course, is the support low. Anything above the trend line, above the pink shaded area, definitely would be the risk in the scenario, and you look for it to go back higher again. Let's go ahead and set this up as a pending order real quick. I'm going to set it up as a pending sell. I want to get as close as possible to 7,020, but I may not see it reach all the way in there today. So we're going to set it up as a sell limit. I'm actually going to go a little bit shy of that. I'm actually going to put it right at the bottom of our pink shaded area at 7,010. Again, you're only looking at 30 to 35 pips of profit or risk here with the stop loss. So let's go ahead and place that in there so the market can take us in if it hits that 7,010 level. Our risk, again, we're looking somewhere up here into this area right here, right around the 7,050 to 55 level for your stop loss. 7,050 to 55 if you're looking to place a stop loss. Soon as this gets activated and taken in, I'll be applying the trade manager that members have on the member site for the Australian dollar. One last look, a little bit of a bonus here for the New Zealand dollar. We also have, of course, weekly time frame. We've been studying the long-term red trend line, the downtrend that we've been seeing here. Daily time frame, we can see the market has been in a little bit of a rise along the black trend line. We see it going up, but we're challenging that today. Let's zoom in a couple of times here on the daily time frame. Take a look. There's that black rising trend line. We're challenging that today. Here's something else interesting. We're also challenging the 100 period simple moving average. That's that green wavy line coming into the chart right here inside the green shaded area. So for the day today, in a similar scenario as the AUDUSD, 65.70 to 65.90. 70 to 90 is that green shaded area. This is your resistance zone for the day today. What's the risk? The risk is that it breaks above there and continues to go higher. What's the potential reward? The potential reward is back down to the blue shaded area. Take it down to the 4-hour time frame. Again, we have a known risk. We have a known potential profit target. We have the known trend. Of course, it's been working its way down for several days. We can see that here along the blue trend line. There's your trend right now. You can see it working its way down. So we're coming into that same trend line. Let's take a Fibonacci retracement measurement from the highest high that you see here on the chart all the way down to the current low. That puts the 236 a little bit higher than our green zone, just into the 6600 or so, maybe just shy of 6600 with the 236 fib. So we're looking at it just above the green zone. So clearly we have the green zone. We know that we don't want it to break above there. That's the risk in the scenario. It breaks above there and goes higher. Our target is the blue zone or lower if the downtrend begins to take hold once again. So this becomes a little bit of a bonus trade scenario today. In fact, I don't see any reason why we wouldn't just go ahead and get into this trade. Let's go ahead and place the pending or the actual sell order here at 60.65. I'm going to go ahead and get into it. Stop loss will be around 66.05 to 66.10. That's just above the Fibonacci levels that we see there for the trade. So I'm going to actually apply the trade manager tool to the trade rather than placing a stop loss. I'll load my typical set here for the trade manager. Again, this tool is available for members on the members website. We're looking at let's say about a 45 pip stop loss. So what I'm going to do is set the absolute max loss at 45 and set that for the trade manager, and that will set that up for the trade. So we have another sell opportunity. So two sells, one here on the New Zealand dollar and the pending order over on the Australian dollar for the day today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.